there, my friends. Chris Marcus here with you on Monday, September 24th for today's StockPulse Market Update. And if you're new to the show, just so you know, every day we do a market wrap-up where we cover what's going on in the world, cover what often the mainstream media isn't telling you, cover what's actually happening with these developments in the dollar, why so many are turning to gold and silver, why the advent of cryptos, and really pointing out a lot of the things that I noticed during my time on Wall Street were often not shared in the mainstream media. And that's what I'll be providing for you every day. So I hope you're enjoying it. And with that said, let's dig into today's wrap, where the Dow Jones closed at 26,562, S&P at 2919, NASDAQ 7993. And over in Europe, the DAX closing at 12,350. In Asia, the markets are just about to get open. Nikkei at 23,869, Shanghai 2797. Over in the oil market, the crude oil contract continuing to climb up to 72.22. And perhaps most importantly, we see here is the 10-year yield on the U.S. Treasury. It was a little bit choppy on the day, closed at 3.06%. But as we will dig into in today's wrap, certainly keeping an eye on the rising interest rates, a big key to everything that's going on and will be happening. And then lastly, the crypto market. Let's refresh this because that green turned to red today. You see Bitcoin down to 65.77, Litecoin at 57.90. Interesting to look at Ripple, which is XRP there. Had some big days last week, down 13% today, so coming down just as quickly. And certainly we'll keep an eye on the crypto market as the fall develops and the developments geopolitically push the dollar closer to the brink. Now, in terms of media, again, my goal is not to criticize anyone else's coverage, but just what I felt was important and a part of the reason why I left Wall Street was here you have Dow rallies. This was from Thursday. Dow Jones surged to its record high on January 30th as gains in Apple and decrease in trade fears lifted the 30 stock index. I thought that was strange to hear someone explain the rise in the stock market based on a decrease in trade fears. I mean, this was as China was canceling the meeting with the U.S. And really, I find a lot of the headlines come out like that, where certainly if you're not paying attention, you could get the impression of something happening when often it is not. And sure enough, last night, here's a Sunday night headline: futures yuan slump at open after China cancels U.S. trade talks. And sure enough, here is today's headline from the same CNBC: Dow drops more than 150 points. And you can see one of the reasons provided that I've just highlighted. Stocks were also under pressure as U.S. and China canceled trade talks previously scheduled. So I point this out just so that you can see really the value of being careful of reading into these headlines too much. There are some sites that are helping you out, some that are not. I'll leave that up to you to decide. I'll just point these things out as I see them. Also interesting on CNBC, new Chinese tariffs are about to make your home renovation more expensive. Another story, Target, or Target as I like to call them, is deeply troubled over Trump's tariffs, say prices to rise on everything from playpens to backpacks. Again, not surprising news. This is what happens when you start trade wars, when you start putting tariffs on. The real people who end up paying the cost are not these governments, but you and I that are going out and buying things that are becoming more expensive with currencies that are losing their value. And certainly that's why there's so much of the coverage is on the commodity sectors, at least from my perspective, and really protecting against that. Another interesting story here on Zero Hedge. Goldman warns of a default wave as 1.3 trillion in debt is set to mature. Why is this a problem? The most likely precipitating factor is rising interest rates, which I've been mentioning for the past couple months. And simply put, The more rates go up, the more likely the bubbles are to pop, the sooner that is to happen. Here, the Goldman mentions interest expense will flip. Oh no, 2018 is likely to be the first year that the average interest expense is expected to tick higher, even if modestly. Certainly on the U.S. government debt load, which is exploding each and every day, how the Treasury is going to fund a higher interest expense outside of just monetizing more debt remains an unanswered question. So we will keep an eye on that. And then again, another interesting article, the dollar shortage and China's bond selling are about to corner the Fed. Putting it another way, they're dumping U.S. bonds. China's ownership of U.S. bonds, bills, and notes slipped to 1.17 trillion, the lowest level since January, and down from 1.18 trillion in June. Again, is that a massive decline yet? Perhaps not. Although, at least to the degree that they're not buying more, we've seen Russia sell their treasuries. The Fed is supposedly unwinding. So who is actually buying the bonds remains, well, perhaps not a complete mystery. I don't think we're getting given the true story. Actually did an interview on the Miles Franklin channel with Rob Kirby today, who talked more about the Exchange Stabilization Fund and some of the other culprits that many believe are actually buying the bonds, which in short means that a lot of this debt is just being printed away, which is why, fortunately, this video is sponsored, as always, by Miles Franklin, where I do buy my gold and silver. You can see gold at $11.99 on the day, silver at $14.31. And should you be interested in purchasing precious metals, you can do so at milesfranklin.com or by calling 1-800-822-8080. And with that said, we're going to wrap things up for today. But thanks as always for watching. Hit the subscribe button, and I will see you again tomorrow.